Good morning. Kevin Cochran with Hunter Street Investment Advisors. And we're here today to talk about one of our most popular programs right now, given the current economic environment, which is a real estate IRA. And the technical term for this is a self-directed IRA. And we'll get into a little bit more of the details of the real estate IRA in a minute, as far as what types of investments are there and how it works. But before we do that, let's talk about why investors are interested in real estate in their IRA. Okay. As an individual who worked as a professional in real estate for about 7 years, prior to getting into this business back in 2012, I know a lot about why investors are interested in real estate. For example, one of those is good income. And today I work with a lot of retirees and people in the retirement countdown phase of life, that last 10 years prior to retirement. And what we know is that when we get to retirement, we're looking for good sources of stable income, and real estate can, in many cases, meet that need. The other thing that investors like about real estate in their IRA is that it is a tangible physical asset. Quite unlike a lot of the things that we have in our investment portfolios, stocks, bonds, ETFs, mutual funds. With a single family rental home, I can drive by that property. I can look at the neighborhood. I can see it. I can see its curb appeal. I can see what's going on in the neighborhood, new developments that are coming in, the growth in the area, and get a very good sense of how stable my investment is and how likely to grow in value that investment is. And so that makes it much more personal and relatable, and people really like that. The other thing is diversification, right? All of those other types of investments, they're all market driven, and there are times in this world when certain things go on that all of those investments go down in value. Whereas with real estate, that's not always true. Even in very difficult times, like the year 2020, when the pandemic hit, all of the investment markets were going down in value, but real estate, especially in North Carolina, continued to increase in value. And part of that was people were migrating to the state. People love North Carolina. People from all over the country move here every year. That's not going to change, in my opinion, for many decades to come. And so that type of diversification that's not correlated to any of the investment markets is another thing that investors really like. One last thing is that real estate, especially in this area, has a history of long and slow and steady growth. I've seen investment real estate property that has grown very steadily, 2% a year over the past 2 decades, and that's not uncommon. So, of course, those types of returns aren't guaranteed, but that's just my opinion, what I've seen in my experience around here. Now, the other thing that's making this an attractive opportunity for investors today is that the stock market has done extremely well, and it's at all-time highs or very near all-time highs. And the same can be true. Same can be said about bonds. Bonds have increased greatly in value as interest rates have slowly crept down over the last really 15 years and are at all-time lows. And as many of you know, when interest rates go down, the value of bonds go up. And so some experts believe that there could be a little bit of a bubble in the bond market. And certainly many people believe that about the stock market as well. And so that is sparked an increased interest in owning real estate. So, and of course, back to the income discussion that we had a minute ago, real estate is a good income. We'll look at a case study here in just a minute of an example where investors are earning 5 or 6% of income, cash on cash return, whereas the average dividend yield right now in the S&P 500 is around 2%. And the 10-year note is around 0.75% for U.S. government 10-year bonds. Corporate bonds are a little bit more than that, but nonetheless, the income you can get out of real estate right now is very competitive, if not superior. Moving on to talk a little bit more about what is the real estate IRA or the self-directed IRA. This is an IRA account pretty much like any other IRA account. You could convert your old or your existing traditional IRA, SEP IRA, simple IRA, even that old 401k could be converted into a self-directed IRA. And if you happen to have significant investments in a Roth IRA, that could be converted into a self-directed Roth IRA. So then the investment gains that you make will grow tax-free. So incredibly powerful way to build wealth with the self-directed Roth IRA. Again, you're in charge of deciding the investments. And so you're going to work with your real estate agent or real estate expert to identify the property that you would want to invest in. But once you do that and you know, you're experiencing gains in that investment, those gains in a traditional self-directed IRA are going to grow tax deferred. So you will get that benefit, and that's the benefit of having the IRA as the overall structure of this. Okay, you can invest in a wide array of assets. We've talked about single-family rental homes, of course, but also fix and flips. So if you are in that business, you could look at using the self-directed IRA for that. Raw land, commercial buildings, commercial investments, private placements, even private lending. So if you are a real estate investor that likes to lend it out to business partners that do the fix and flips or other types of real estate investing, you can do private lending with this as well. So one unique thing is that you're going to be using a unique custodian. I have built relationships with who I think are the best custodians for the self-directed IRAs. You won't be using your names that you've heard about regularly, like Charles Schwab, where we do our investment for our clients, or Fidelity or TD Ameritrade. Nothing like that. You're going to be using a specialty custodian. These have been around for several decades. I know companies that have been running these self-directed IRAs for over 20 years. So this is nothing new. And the self-directed IRA became legal in, I think it was 1974, right alongside the regular IRA, the one that you're familiar with. The process is very simple. We'll get together, we'll open up an account with our custodian, a little bit of paperwork, and $50 to open up the account. And then we'll do a little bit more paperwork and transfer funds from your existing IRA account with your custodian over to our custodian that manages the self-directed IRAs. And then you work with your real estate attorney, real estate agent to purchase the real estate that you want to hold in your self-directed IRA. And after that, you are ready to go. Our custodian will, and along with my assistants, will make sure that you don't run afoul of any of the regulations tied to your IRA, so that you don't trigger an early withdrawal from your IRA, and that you're maintaining compliance with all of that. So we will assist you with that based on our experience. And your annual costs for this are going to be very similar to the types of fees that you're already paying your investment advisor already. So just give me a call. We can talk through those details. Be happy to help you with that. And to wrap up, let's talk a little bit about a case study, just a simple example. Okay, so let's say you've got $150,000 that you would like to use for of your IRA that you would like to use for investment within your real estate IRA. And we would typically recommend no more than 20, 25, 30% at the most of your overall portfolio to be invested in real estate. Of course, we have some clients that are in the real estate business that like to do a much higher percentage than that, but for the average investor, somewhere in that 10 to 30% range is a good range in order to get some good diversification and the benefits of this, but without too much exposure to the real estate industry. But then you work with your realtor to find the property. You make your cash purchase with your self-directed IRA. And let's say the all-in cost for this rental home is $120,000, and you can rent it for $1,000 a month. Okay, of course, you've got some expenses there as far as property taxes, property insurance, possibly a homeowners association, and then any of the other expenses that you would continue as far as pest control, maybe some of the utilities. And let's assume that's 40%. Well, that would leave you with net cash on a monthly basis of $600 a month. And looking at that on an annual basis over the $120,000, that's a 6% cash on cash return. And so if you remember some of the earlier income numbers we were talking about from other investments based on today's markets, that's a really good cash on cash return. So in summary, the real estate IRA is something you should absolutely consider in order to get good income, diversification of your investments, slow and steady growth. And we can help you get that set up and be happy to do that. So just give me a call here at Hunter Street Investment Advisors in downtown Apex. The phone number is 919-427-0424. Have a great day.